Okay, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting it. So we're going to do an update on precious metals today. It is November 8th, and I've been really busy with some family stuff, so haven't been able to post a video and may not be able to post quite as often. I mean, we'll see. But big things happening. Want to make sure we're updating here. And definitely follow on Twitter if you're not already. You can take a look at the link in the description. So we'll start with gold. Again, going to look at the precious metals today. So we're going to look at gold. We'll look at silver. We'll look at GDX. And then we'll also look at the gold to silver ratio. Because that's giving us some important clues. So gold here, we talked about this in the previous video. You can always see the link in the description for that. We had this structure here where we had a low on day 19, and then we had this low here, and then this basically a triple bottom. And so if you just count this whole thing, you could say this was a cycle that's 27 days, and it topped out on day 5. So incredibly bearish, right? Think about that. A cycle that rallies for 5 days and then declines for essentially 22, right? Again, this is a double bottom, of course. And so what we may have here is a daily cycle low on day 27, which would have been Thursday, November 3rd. And that would be today starting day 4. And so today's candle is going to be Wednesday. Now, understand that we're going to have, the inflation number on Thursday, 8:30 a.m. That's going to change everything, right? Everything's going to kind of pivot off of that. But this is the setup for potentially a new daily cycle. Now, alternatively, we could be running into a high, right? That we're going to print a swing high on the CPI. You always have to be aware of all the scenarios. But right now, this looks pretty bullish. Look at this. You had this big move up, and then you had consolidation, another big move up. And now what are we getting? Consolidation, suggesting this is a pause for another big move up. Now, again, is that going to leave behind the swing high, or are we going to continue to make higher highs and higher lows? Because right now, that's a higher low, right? This needs to hold as a higher low so that we kind of keep the move running. Now, notice this actually looked pretty bullish in real time, right? This is a nice string of 5. These two candles notwithstanding, this is a pretty nice little rally, but then we gave it all back. So you do have to be cautious. But let's look at the higher time frames. That's the daily. What really matters is the weekly, the monthly, those higher time frames. Now that triple bottom we talked about on the daily, that's how it looks on the weekly. This is multiple time frame analysis. That's the real edge here. And you can see in terms of a cycle count, we may have gotten a weekly cycle low and call it week 15, right? We knew we had this swing low from week 10. We came up the that next week and then pulled back hard. And then we essentially kind of consolidated in this area. Now we're trying to break out. So that 1729 area is your next kind of real signal. And this is the gold CFDs, not the futures, mind you. That next area that we'd be looking for is this next swing high from the weekly, right? That's at 1806, right? Now we do need to get through 1740 first, and I'll show you why that number is significant on the monthly chart. So, and this is actually the most important thing about all of this. I talk about this in all of the precious metals videos. We are in the declining phase of the 8-year cycle. And I'll say 8-year cycle in quotes because it's not exactly 8 years. It could be 7 years. Call it in that ballpark, right? 7 years is 84 months. 8 years is 96 months, right? And so it is entirely possible that we are actually now, we're just starting a new 8-year cycle, right? Again, in quotes. I'm not saying that's exactly what's happening. One thing that we would need to see, look at this monthly candle. We need a move above 1740, right? That's the high from this candle right here. Or excuse me, this candle right here has a high, of 1729. So it's that same level on the weekly, right? So once we go above that, that makes all of this stuff a swing low. That means we're now making higher highs on the monthly chart. What we would need to see after that is that we can hold a higher low. That's incredibly important. That's how you confirm a trend is in place. Not just a higher high, right? Because that could become a fake out. How does it react on a pullback? Is it able to hold a higher low? That's what we're going to see eventually. So that 1729 area should come. You would imagine we're going to get, we're going to at least test that, if not go through it. And then that really tells you how do we behave around that number. So that's bullish. The other thing to keep in mind, other things, there's something in here in this for everyone. If I go back to the weekly chart, this yellow line is a 200-week moving average. And notice we closed below it for several weeks, and then we've now busted right through it, right? And if we can close the week above it, that's going to be an important signal. A lot of people watch, the 200-day moving average and certainly the 200-week moving average. It's a very long-term trend. Once we started playing around below it, that was bad news bears. Now, it doesn't mean we're out of the woods. We could close above it, and then this becomes a false breakout. And I'm not even saying, that the 200-week moving average is super significant. It's just another piece of sort of data, right? Something that people would scan for instance. And if you think about moving averages and even longer context, this teal line is the 50 period moving average. And since this is a monthly chart, this is the 50-month moving average. So again, the idea that this is an 8-year cycle low, you would expect that we would make a move below the 50-month moving average as part of the decline. And we've done that. And now we're trying to rally back, right? So it's like it's checking the boxes. Now notice for this 8-year cycle low, right, the one that happened on November 15th, is that December? Excuse me. Yeah, December 2015. That was your last 8-year cycle low. That cycle lasted 86 months. I mean, look at that. We had this vicious decline, and look how far below the 50-month moving average we were. Many, many, many months. In this case, we just kind of peaked below it. And notice this 8-year cycle low that lasted 92, this 8-year cycle that lasted 92 months, didn't even get below the 50-month moving average. It just rocketed higher, right? This, by the way, was the most bullish cycle, 8-year cycle gold has ever had, right? In terms of how long look, the rally lasted 85 months. This was a pretty bullish cycle in terms of percentage gain, but the rally only lasted 41 months. I mean, even this rally for this 8-year cycle lasted 56 months because our top was in August 2020. So that's the big, broader context. That's what you want to understand because that's going to dominate everything. And as we talk about dominating everything, let's look at silver. Now, the thing about silver is it's a much smaller market than gold. It moves more violently, but gold kind of needs to do well for silver to eventually do well. And so silver is clearly on a different count than gold. This is your daily chart we'll start with. And we made a daily cycle low on day 31, and we're now in day 18. We have a high from day 17, which was yesterday, Tuesday, or I should say today, but we're now trading. This candle is going to become the Wednesday candle. So we're getting a little late in the weekly in a daily cycle, but we have made a higher high. And so as I just said, we now need to see that we can hold a higher low. This was your first higher low, right? Similar to gold, right? This little thing is a higher low, right? After making a higher high here above all this stuff. So if you go to the weekly chart, this is looking really beautiful. We talked about the fact that this was a potential weekly cycle top on week 5, so that 21, 23 area, and now we've made a move above. We've poked above it, and then we've pulled back a little. This is the top. This is where the rubber hits the road, right? The one thing I don't like about this is that this is already week 10, right? So this is this is not early in the weekly cycle for us to be trying to re-break out, right? We just kind of wasted a lot of time, right? That doesn't mean it's the end of that's not the end of the world, but it is something to kind of be a little bit cautious about. And if we look at the monthly chart, this is the most important news of all. Whereas gold is still trying to make a monthly swing low, this is basically there, right? This move here above this candle makes this candle a monthly swing low. That makes September a potential bottom for a long-term cycle, right? Like if you see that structure, right? We had this precipitous decline, this dip, and then we just bounced up. Now notice gold just kept dripping lower, and then we have one green month. Here we've already strung together 3 green months, albeit October is obviously a really ugly doji candle. But this is telling you that silver potentially bottomed ahead of gold, right? Now, this could just be building out a lower high on this downtrend, right? I'll just draw it so that we're crystal clear. We could just be building something out something like that, right? We want to be careful. We want to be cautious. That's why you use stops. That's why you observe the trend both ways. But this is interesting. right? This is exciting. And if we flip over to GDX, we'll stay on the monthly chart actually. Look at that. GDX is, the miners are starting to lead. That is really interesting. That's one of the things you look for when you want to think about how quote unquote trustworthy a rally is, right? So this is the same pattern as silver. In the case of the miners, October was actually red, but it was still a doji. We are seeing the potential that September was a long-term cycle low, right? We had this drip down, and again, gold continued to make lower lows, but the miners said, stop. So that's an important signal. I mean, and again, there's a lot of month to trade, right? It's only November 8th. So, like, we can get a massive rejection. I mean, this is a perfect example. This candle here, I just want to be really clear. You have to understand how candles form and how they transform. This was a bright green candle at one point, right? Looking something, I mean, it didn't look like this because it didn't have a lower wick, but I mean, it was, looked more like this, right, at one point. How do we know that? How could I possibly know that, right? Well, I know that because it opened here, and then we have a wick all the way up here, right? So that means it opened here, and at one point, the body of the candle was all the way up here. Like, I had filled this in at one point, and it was green, right? It had made a higher high above here. That was exciting, right? It was like, okay, now we're gonna try to take out this high, and no, it failed, and then it kept going lower. So just be aware of that. We're really early in the month. I mean, this is a very frustrating one. This was a nice green candle at one point. That's what a doji is, right? Something that was green at one point, then kind of fails on you, but then comes back. So that's important stuff to be aware of. That's your monthly. And if we go back to like the smaller cycles, you could see a similar pattern as gold here, right? For GDX, where we have, we're really early in the daily cycle, right? Tomorrow would be day 4 in this case, but be aware of this gap here, right? This gap that happened on November 4th. I mean, these things tend to get filled. It's between something like 23.14 and 23.77. Call it like a 60-cent gap on a $23 ETF. It's a decent percentage move. But more importantly, look at this. We had this high here on day 6. We dropped down into a low. We tried to retest it, didn't even get close. And now we've broken above it, closed above it. Now, again, not to belabor the point, but we're going to want to see us hold a higher low. This is a higher low. We're going to want to see another one of those higher lows and then that move up. Looks like we're going to get that, and we're going to try to test that 2760 area. I say that because if we look at the weekly chart, we've already taken out this high. Look how far below our 200-week moving average we are. We could continue to run higher, even if this is going to be a bearish move. Maybe, get closer to the 200-week moving average before failing. At the very least, it would seem we're going to try to take that stuff out, right? Like above this swing high. So 27.59. And you can see a world where we try to test like that was an important low. So like, that getting closer to $30. That is, that's a possibility here, right? I mean, obviously, especially if it actually is a long-term cycle low. In terms of the weekly count, we had this potential ICL on week 35. And then, look at this ugly thing, right? And then we had this, like this really ugly candle. I marked this because this was a swing high at one point, right? That next week we came in and wham, it looked like this thing was going to fail. In real time, it looked like it was going to absolutely fail. Then the next week we get consolidation. Then we get a higher high. We get this scare here. Again, knowing how candles form, at one point this was a bright red candle, had made a lower low. You're thinking, okay, we're about to make the move below here, right, in real time. But of course, it ends up reversing, and now we've got our higher high. That's why you have to be adaptable. You have to be kind of nimble and looking on those different time frames, because it's these huge daily candles that cause this on the weekly, right? We had this big move down that caused this wick, and then we had this reversal that caused the hammer, right? It's important to kind of understand that stuff. And so we'll close out with the gold to silver ratio, because it's important to get a sense of how that, like how if silver is essentially outperforming gold, because you tend to get a more bullish move in that case. And we'll actually we'll just look at the higher time frame chart. So we'll look at the monthly chart. If we were to, and we talked about this in the previous video, I think, or the one before that, Like if you think about like long-term cycles for this ratio, again, this is the ratio of gold to silver. We've had this like, this last rally was 44 months. That was the one into the COVID high, like that top where silver dropped like $11. And then we had this huge decline, right? That was your rally for the precious metals. And then we had this move up, that's a lower high, and then a lower low. And then we have had this little rally. That's this bear market we've been in precious metals. But look at this breakdown, right? And just to be clear, this makes month 19 a swing high, right? And now we're getting bearish follow through here in November. And notice this on this chart. We had a rally for 44 months. The previous long-term cycle rallied for 59 months. That's what these mean. We had a cycle that rallied for 64. This was a short one that rallied for 30. It looks like we may be setting up for one of the shortest tops in that we've had in terms of long-term cycles. I mean, again, even this one at 30 weeks would be much longer than 19, which could also mean this is going to end up as a higher low and we're going to continue higher, which would be bearish for precious metals. But right now on its face, this looks like a massive lower high to this, right? Bad news bears, right? For the gold to silver ratio, which is generally like bullish for precious metals. So a lot of signals suggesting, maybe we do have a long-term cycle low here. Certainly enough to kind of dip your toe if we can hold a higher low is what I would say. If we can hold that higher low. So that's the wrap up for precious metals.